Okay, so as you probably guessed, since the amount of rent you'll owe over the term of the lease is so much higher than the rent you'd owe for an apartment, security deposits are also a lot higher. I'll break down general expectations and the most common ways to structure security deposits. It doesn't need to be upfront, all cash, though it can be. In general, every landlord is going to make their own determinations about what they'd want in a deposit to secure the lease. So it's not a standard thing like in a residential lease where the deposit may be 1 or 2 months. The landlord isn't just holding your security deposit until the end of the lease to use to repair any damages. It's really about covering some of a landlord's downside if your lease is terminated early because you default or violate the terms of your lease. Each lease is different in the way that they define default, and you'll review and possibly be able to negotiate the cases in which the landlord is allowed to take your security deposit with your lawyer as you review the lease. Landlords have different ways of determining these things. If it's a big institutional landlord, they may even have a separate credit committee they'll send off your financials to, along with the deal terms, and then they'll come back and propose something. Usually, the things landlords pay the most attention to are the size of their TI payment to you, as well as their other transaction costs, so that if you were to break your lease in the second month, they'd want at a minimum to be made whole for their expenses. They may also want to cover their downtime, or the space will be vacant between your leaving and their finding a replacement tenant to start paying rent in your space. Again, every landlord is different, but those are the general considerations. Let's talk about the different ways you can securitize your lease. It's usually a combination of a cash security deposit for a smaller amount and a guarantee for a much larger amount. Some tenants may prefer to have a larger security deposit and no guarantee, which can usually be negotiated, but it rarely goes the other way, where you have a big guarantee and no deposit. Most landlords are going to want you to put something down. I'll explain a little bit about the difference between the two. And before we get started, we typically talk about security deposits and guarantees in terms of a number of months or years of future rent. The simplest option is just a cash security deposit. We're not talking about actual cash. You might write a check or you might get a letter of credit, which is pretty common. A letter of credit, or LC, or LOC, is a document you can get from a bank to guarantee the payment of funds in lieu of a check to the landlord. You do need to secure a letter of credit with the full amount so that these funds are frozen and you can't get to them. It's very different from a line of credit. Think of a letter of credit like an escrow account. Neither party can get at those funds until certain conditions in the lease are met. So unlike a check, which a landlord could theoretically just deposit or cash, they can't draw down on your letter of credit unless they're allowed to by your lease. So lots of people prefer to use a letter of credit rather than a check, but it does take the bank a little bit of time to put together. So make sure you check in with them and start the process early enough so that we're not delaying lease signing to wait for a letter of credit. Guarantees are the other most common way to finance a security deposit. Unlike a letter of credit, you don't actually put up the cash when you offer a guarantee. You just promise to pay a certain amount of money. It's a legal promise, not just handshake, wink, wink. You're legally responsible for your deposit. Companies with strong corporate financials, by which I mean a significant amount in assets relative to the size of their lease, without too many other liabilities, and critically a few years of operating history, companies like that can give a corporate guarantee. So the company backs up the obligations in the lease. This is great because no one's personally liable for the guarantee. But if you're a new company, most landlords won't accept a corporate guarantee. Instead, they'll be looking for a personal guarantee. So even if the business fails, you'll still be on the hook for the security deposit. Lots of new businesses fail, so landlords have a much better shot of actually being able to collect a personal guarantee than a corporate guarantee from a company with no assets or operating history. Since you're not actually putting up any capital, the size of a personal guarantee is usually a lot bigger than the cash security deposit. Often, they'll increase as the annual rent increases, sometimes called a rolling guarantee. So a 2-year rolling guarantee means that you're guaranteeing the rent for 2 years in the future, even as the rent increases year to year. You may be able to negotiate a guarantee that converts from personal to corporate over a certain amount of time, basically once your company's had enough operating history for landlords to be comfortable with the company's balance sheet. The landlord may want to qualify the net worth of the company in addition to the amount of years it's been operating. It's just going to depend on the landlord. Lots of people don't like personal guarantees and will tell you to avoid them. And it's definitely scary to be personally liable for multiple years of rent. But Lots of times for a new business with no track record, this is the only way you're going to be able to get the TI package you're looking for. If you can get the landlord to agree that the guarantee can convert to a corporate guarantee at some point, that definitely makes it better. Another mitigating factor is negotiating a burn down into the guarantee, security deposit, or both. So the amount will reduce after a certain period of time. It may even have a number of reductions. Lots of times landlords will want to wait until the end of their payback period or until they've broken even on your deal. So the landlord starts in the red because they paid up front for your TI, their lawyer, and both commissions, and you slowly pay those costs back with your rent. That's called the payback period. Once landlords have been made whole for their transaction costs, they may be willing to burn down the deposit or guarantee. Or it may just be a certain number of years, like the guarantee reduces every 2 years, that kind of thing. The theory is both that you proved yourself as a successful business person and that the amount of future rent you owe continually decreases. So it's definitely common for security deposits and or guarantees to burn down over time. You may have also heard of a good guy guarantee. This concept is most popular in New York City, though I've started to see a few good guy guarantees in DC. So the concept is if you have a 1-year good guy guarantee, you're able to provide notice that you intend to terminate the lease, and after 1 year, you're no longer liable for any additional rent. The difference between a 1-year guarantee and a 1-year good guy guarantee is that while you owe the same amount in both cases, 1 year's rent, with the good guy guarantee, you're allowed to continue to operate during that year. It's not a super common structure, but it may become more popular, and I want to mention it so you know what it is in case you encounter it. So I mentioned it's usually a combination of cash security deposit, meaning check or letter of credit, plus a guarantee. Again, these vary widely based on your landlord, but to set expectations for order of magnitude, it would typically be a security deposit ranging from 1 to 4 months, plus a guarantee ranging from 1 to 3 years rolling. It may sound onerous, but remember, this limited guarantee is vastly preferable to being liable for the full amount of rent for the whole term of the lease. Last reminder, whether security deposit or guarantee, make sure you understand whether the landlord is proposing base rent only or base rent plus pass-throughs or triple nets. It isn't consistent, and as you probably know by now, these numbers are very different.